gentlemen. It's been a fantastic day today, listening to all the stalwarts of the lending domain. I believe we've got lots to take back home, and with the recent panel discussion, much focus being on how to move ahead, and how to move ahead with technology, how to move ahead with your funding needs. So let me just put a perspective of what AllCloud has to offer. As a company, we founded in 2014, and we have more than 45 NBFCs and other lending companies on our platform, funding more than 7 lakh borrowers for 10,000 crores of funds. So AutoCloud is our lending platform, and with AutoCloud, we aim to redefine how lending is done. Yes, we're not a disruptive technology, but we are a tech fin for fintech. And at the core belief of AllCloud is that any company, any financial company using technology to deliver services to their clients is a fintech. That is how they will embrace technology. That is how they will deliver better services. And we are here to facilitate such services to all our clients and understand what they need, what their borrowers need, and their internal growth story. We are here to provide an end-to-end solution for lending that starts with your loan origination and ends with the closure of a loan. In between, how you take a decision to fund, what kind of risk scoring models are you using, how integrations have to be done with different data points, and those data points to be collated together with personal touch. From there, we move to loan management services, how you communicate with your clients, what kind of interactions your team is having, how do you want your borrowers and your team members to interact. We've got a very efficient collection management system that's an on-field cash collection solution plus a digital e-NACH integration or any other payment wallet integration you might need to collect money from your borrowers. Our BI-driven reports and our accounting engine will completely redesign how you look at lending. And with having all your solutions at one platform, we're also reducing your compliance cost. Technology should be an enabler. Everybody talks about a borrower's journey, how it can be made more efficient, how a borrower experience can be enhanced to deliver the best of services. We, yes, believe in providing a best solution to the borrower, a best experience of borrowing, but internally, our sales team, our credit team, the guy who's sitting behind the computer to do credit assessment needs to be provided with the best of tools, best of services, and the best of UI to take this loan process ahead. And that's why we call something as phygital lending. Phygital lending is what is happening here today. 100% digital or 100% personal lending cannot happen. You need to combine the best of both. And different lending companies have different models. Some have a more digitalization at their front end, but some have more personal touch. And that is how a true lending experience can be brought out. The different proportions can be fixed to create different models. What we do at AllCloud is add domain to the lending, to the credit underwriting. We've worked with our customers for creating different lending models. For example, we've created a business loan for schools where the credit revolves around how the school is going to perform in the next 5 years, 10 years, and the credit happens on how many numbers of students it has today. For example, let's take insurance loans. We're working with one of the largest insurance providers in the country to provide loan against insurances. There, the whole credit is happening on the policy. What is the term, what is the maturity value, and what can be lent out to the borrower. For example, let me pull out a case study of our client, Kabil Finance. They fund dairy, they fund for livestock, they fund for cold storages. Now here, it's not a personal loan, it's not a business loan, it's a cattle loan. So you need to know what is the yield the cow is going to give, how many cows the guy has, and what is the cash flow the guy is going to generate. For them, we have created a unique, simple, easy onboarding process and a 5-day, 10-day, and a 15-day collection mechanism. Now, Padma Sai Finance is one of our very old customers. They fund used and new two-wheelers. Their growth story has been with us for the last 3.5 years, for starting from about 6,000 loans to today about 25,000 loans. They want to fund their borrowers in 45 minutes short. So we've created an integration-driven system whereby they are able to take decision in 5 minutes and disburse in 45 minutes. This is a consumer loan for them, but the credit happens on the two-wheeler. So these are the systems, these are the kind of models we are creating, and at the core of our belief is that each lending arrangement has to be dealt in a different pattern. So we are very true to our belief, and we believe that if any of our clients needs a unique model, we're there to help them. One more thing we have created is a co-lending model. I was just listening to the panel discussion prior, and the discussion was that banks have excess liquidity, but that's not coming into the NBFC space. But with co-lending and our prototype for co-lending being there readily to use, you can co-originate, co-fund, share revenues, and combine the best of both worlds. It's an efficient model we have developed for a vehicle financing industry that can be replicated to any lending arrangement. So you can effectively fund with a bank, you can originate loans, the bank can participate, and you can share risk and combine your forces. With this, I would like to also thank you all for listening to me, and if you have any ideas, let us implement them. We'll be open to discussion and taking things forward from you. Thank you.